All right, everybody, thank you so much for joining me today on our next edition of our Franchise Your Business webinar series. And like to just thank you all for being here. And as we've got our group slowly starting to load into our session here, just a couple housekeeping items. If you're new to our show or new to this program or new to Big Sky or new to franchising, please subscribe to our podcasts. This gets replayed on the Franchise Your Business podcast, so you can see all kinds of previous and past content there. And then our weekly podcast that's fast approaching 250 episodes is called Multiply Your Success. We have some phenomenal guests that have hit already at the first part of this year. So if you have not subscribed to that, go ahead and do that. And a lot of folks who I speak to say, well, Tom, this is great, but I do everything on YouTube. I just subscribe to the channel. Well, we'd love for you to do that. You can subscribe to our YouTube channel, which is just Big Sky Franchise Team. If you search for us there on YouTube, you'll find it, so hit subscribe. We have about 600 videos, podcasts, webinars, all kinds of things ready and available for you to tune into. Now, the nature and format of this session here today, this is our current franchise sales and marketing trends. We've been doing this every month for, I think, coming up on almost 4 years we've been doing this. It was, I don't know, maybe the fourth quarter or so of 2020, right in the thick of right at the end of 2020 there. So this session, we're going to move fast, we're going to move quick, and we go through a lot of data information. Because it's live, if you have questions, if you have thoughts, if you have things you'd like to ask, just ask, interrupt, type it into the chat box, or hit the raise hand feature. I'm flying solo in terms of managing this and presenting at the same time, so I'll do my best to try to see the hand or the chat pop up and address those questions as they come through. So with that, what I will do is share my screen, and we will get this show on the road. Let me see here. Maybe we will. There it is. Okay. All right. We're going to hit share, I think. There we go. Okay. So the first screen that we like to share and talk through is from the Institute for Supply Management. They do a report on business, and this is the Manufacturing Purchasing Managers Index, or PMI, and this was analyzed by Timothy R. Fiore, who put that in, and sorry, Tim, if I messed up your name there. He's the chair of the Institute for Supply Management Manufacturing Business Survey Committee. Now, I love starting here because manufacturing is a critical driver and a critical hub for business in the United States and really around the world, but especially in the U.S. It is a leading indicator. So it's really important to look at that. So where we see this going today is what we could start to see and look at give us a picture of where we might see the economy in 12 to maybe 24 months down the road. That's why I really like to start here. Also, it's why you hear oftentimes politicians talking about manufacturing. Now, whether there's a comprehensive understanding in terms of how that all ties in together, it is important, and it is an important driver. Even though manufacturing still maintains a much smaller percentage of the overall U.S. economy, it's still an important driver. And so this paragraph reads, the U.S. manufacturing sector contracted for the 9th consecutive month in December as the manufacturing PMI registered 49.3%, which is 0.9 percentage point higher compared to the 48.4% reported in November. After breaking a 16-month streak of contraction by expanding in March, the manufacturing sector has contracted for the last 9 months. Now, as I zoom in on this, what I really like to show is you can see it dates back to 2022. You see it was positive, and it really started coming down and contracting here at the tail end of 22. And into 2023, it was below for the whole year of 23. And you saw a little bit of life in Q1 of 24, and then it popped back down, and now we see this starting. Looks like we're starting to see a trend. The last 2 months of where we're starting to see this trending up to a manufacturing break-even line. So when I look at this, I say it's pretty easy to see. Well, 2024 was pretty kind of below average for many, especially in the small business community. Well, this is a leading indicator. It might give us a sense to say, oh, well, manufacturing's been down a bit. We saw it bump up a little in 24, but for the most part, it's kind of stayed about the same and for all of 24 where it was in 23. Little more zigs and zags, but if you kind of see a trend line here, it's kind of trying to trend up, but staying about the same. So we'll see if this trend at the tail end of in Q4 here, where we start to see this trend up, we'll see if that continues for this month, which we're already at the tail end of January. So we'll see in February's report what this is showing us. Fingers crossed we see that going up, because that's a good thing for everybody, for all people, for all business owners and business leaders. Okay, let's take a look at the services PMI. Now, services obviously is important because it's the largest segment of the U.S. economy, and this is the Institute for Supply Management's report on business. This analysis was done by Steve Miller, who's the chair of the Institute for Supply Management Services Business Survey Committee, and it reads the services PMI at 54.1%. And it says in December, the services PMI registered 54.1%, a 2 percentage point increase compared to the November reading of 52.1%. A reading above 50% indicates the services economy is generally expanding. Below 50% indicates it's generally contracting. Services PMI above 49% over time generally indicates an expansion of the overall economy. So you can see here that I'm zooming in. You see in 2022, there was this trend line you can really visually see of a decline, steady decline. 2023, you kind of see that trend line steadily declining again. And then about halfway through 2024, you start to see that trend line going up again here. So we start to see it. It's looking like it's starting to pick up some steam, which is great for the last half of 24. And hopefully we can see that trend continue into 2025 here. Again, this is a positive sign. Why do these things matter, by the way? Just to take a quick step back and zoom out for a second for you and your franchise sales efforts, or talking to franchise prospects, or even with your franchise system at large. To me, it serves several purposes. Number one is that you, on the new franchise sales and marketing end, this is data and information you can be sharing with prospective buyers. There's a lot of trepidation just in general with people wondering what's going on. And that's not just a new thing. That's just an all the time thing. People want to generally know what's going on with the economy, especially when it hasn't been as strong or robust as it has been in the future, whether it's a down economy or a mid economy. If it's not robust, if it's kind of in the middle, it's up and down, people don't really know which direction are we headed. Providing them with information and data still may not calm a fear down, but it will provide some resources and information to educate them on what's going on. So you can share this information with prospective franchise buyers in terms of what might be coming down the pipeline and what might be happening. So for the manufacturing, if you're in the services business, this generally is a good thing. What this means now if for a franchisee that maybe has come on board, or for your marketing department to share, the last half of 2024, what you should be noticing is that it's a little bit easier to start making sales. If you're in the services business, you should generally, when you start to see this uptick, it means that the economy as a whole, if you're in the services business, it's a little bit easier to make a sale. It's a little bit easier to get to a yes. It's a little bit easier for that prospect to move forward. So just some food for thought for you there. And then the final report from the for the Institute for Supply Management report on business. This analysis was done by Nancy Lemaster, and Nancy is the chair of the Institute for Supply Management for the Hospital Business Survey Committee. And as you can see here, it says the hospital PMI is at 56.3%. And I'm going to start at the first sentence of the second paragraph on this report. And it says the hospital PMI registered 56.3% in December, a 2.2 percentage point decrease from the November reading of 58.5%, indicating a 16th straight month of growth. The business activity index remained in expansion territory for the second straight month. So just as I look over here, and you can see this report, the zigs and zags, as I describe it, are much more drastic in this report than the other two that we just looked at. In my opinion, I think it's largely due to one, the hospital segment here is its newest report, so there may not be as many participants as the other. So a large participant or survey or a few responses may change that. Maybe that's the case. I don't know for sure. Or I should say, I think it could just be that maybe the hospital industry is a little more has more cycles that it might go through, where their purchasing managers are buying in bulk, or seasonality based on, is it the cold and flu season? Is there a cold virus going around that people are going to the hospital or selling, or that supplies are being purchased for? So just some food for thought to think about in that regard there. For those of you that are just joining us, please feel free, if you have questions, raise your hand. Happy to answer those or type it into the chat box. Okay, next up on our report is to take a look at the United States unemployment rate. This is from tradingeconomics.com. This is the U.S. unemployment rate, and it shows what the unemployment rate here was for the last 12 months. So we can see the unemployment rate in December is at 4.1%. And it reads up at the top of this summary here. It says the unemployment rate in the United States went down to 4.1% in December of 2024 from 4.2% in the previous month, below market expectations of the 4.2%. The number of unemployed individuals decreased by 235,000 to 6.886 million, while employment levels increased by 478,000 to 161.661 million. Meanwhile, the labor force participation rate was unchanged at 62.5%, and the unemployment population ratio went up to 60% from 59.8%. And their data source that they use for this website is the U.S. Bureau of Labor Statistics. I like how this website, how Trading Economics, gives us a nice visual to take a look at. But you can see that the unemployment rate steadily kind of rose throughout the year. You see a trend line back in January of 24, it was 3.7%, and it ended the year at 4.1%. So what I like, though, is that we see the labor participation rate. It looks like our number of people employed is going up. So we're seeing some positive trends there, what's going on, and maybe some more folks participating in the labor force. And what does that mean? Well, at 4.1%, to me, it means that there's probably a good chance for new franchisees or current franchisees to be able to find quality talent. Moderate to high quality talent is probably in and available in the workforce. As that unemployment rate continues to tick down, the quality tends to be more fierce to find that high quality talent, where there's just less available. You have to pay more for it. At a 4.1%, this is not a terribly high unemployment rate, but it's higher than 3.5%. And so what it indicates is it might be a little bit easier to find some qualified folks for your franchisees at their daily operations. So just a talking point for marketing, for sales, and for you to be sharing with your franchisees that may be recruiting or finding new franchisees. Okay, let's take a look at the U.S. inflation rate that we can take a look at. And this is from tradingeconomics.com, U.S. inflation rate. And it says the annual inflation rate, this is in their summary, it says the annual inflation rate in the U.S. rose for a third consecutive month to 2.9% in December of 24 from 2.7% in November, in line with market expectations. This year-end rise is partly driven by low base effects from last year, particularly for energy. So if you, as you may be familiar with, you see this inflation rate slowly starting to increase. Now it's at 2.9%. If I zoom out and I look at just the last 5 years, if we go back, or even a 10-year stint, but if we go back to here's 2020, now we see that big surge of inflation. You see, the big government printing of those stimulus checks and such that went out during the COVID era. You see the inflation spike, and it's slowly been coming down. The June of 22 was the biggest spike at 9.1%. And remember, all of these numbers we're looking at a year over year. So if we look at December of 24, it's 2.9% over December of 23, which was 3.4% over what it was in December of 22, which was 6.5%. So the good news is that the 2.9% is up over the December of 22, which was December of 23, which was at 3.4%. So the good news is these numbers are getting compressed. And so the analyst that wrote this summary, what they're saying is that we might start to see it tick up, but the actual number it's going up is starting to hopefully stabilize as we're seeing these jumps in inflation become a little bit closer to that 2 or 3% that they're trying to temper inflation around. Okay, so just by comparison here, if we look over in June of 2018, July of 2018, it was 2.9% inflation that month. So to me, this tends to be a positive sign of seeing this hover around that 3%. We definitely want to watch it as we're seeing it tick up the last 3 or 4 months from that 2.4% in September. So it'll be interesting to see what it comes back with here in January. Again, all of these points, I just want to read, these are things you ought to be reviewing or discussing with your franchisees. Why not do your own version of this, or share this report, by the way, with your franchisees when we publish this video? Send this out. Why not? The content's already here. This is something for them to start thinking about from a bigger standpoint than just their local community. And each franchise location will be impacted in different ways by this, but it's a value add that you can provide as a franchisor, or even sharing this on your website for prospective franchise buyers, just to be seen that you're current, that you know what's going on. Okay, next up is the Index of Consumer Sentiment. This is called the Surveys of Consumers from the University of Michigan. They publish this every month and have done so for decades. I like to take a look at the last 50 years, and I'll zoom in on this so you can see all the way on the far right, the lowest report there was back in, I think, around 2022 time period ish was the lowest period, and you see this nice steady, it's kind of zigging and zagging up, but the trend over the last few years is consistently trending up. I'm going to go back now and look at the last 10 years, which makes it a little bit easier to read. So you can see in the middle of 2022, you see that was the lowest period, and now this nice little trend line continuing to just slowly rise up. So you see in 2020, pre-COVID, where it was the peak number pre-COVID right before. In 2020, that was the peak over the last 10 years. And then you see a drop, a slight increase, and then the big drop fell down into 2020, middle of 22, and now just this slow and steady rise that's coming out of it. So what does that mean? Well, generally that means, like I was talking about with the services, when the consumer is feeling a little more positive, makes it a little bit easier to sell customers, makes it a little bit easier for that customer to come out of hiding or sign over a check or buy something or decide to say yes a little bit sooner than maybe they would have, depending on the sales cycle of your business. Or if you're in a retail business, maybe that average order goes up a little bit with folks coming in, or sales are going up because a few more customers are trickling in than were previously. So these are positive signs that you can be talking about with your franchisees to say, well, look, remember way back in the middle of 22, look at where this bottomed out. Here we are. We're coming up on 2.5 years later. And look, things are better. The consumer sentiment is better. It's easier now than it was then. And we see that we're trending out of this, not going down into this further. So just things for you to be thinking about and talking about and sharing with your franchise buyers. Okay. Next up is from the U.S. Census Bureau. These are the business formation statistics. This was released on Friday, January 10th. These are the most recent data available. And what this shows is, as we click on this report here, it shows that in December of 2024, 457,544 new business applications were filed across the United States. There was a 1.5% growth rate from November of 2024. That's pretty substantial growth. And my favorite thing about this data point is you can see here, outside of 1 or 2 months since about August or so, or September of 2020, with the exception of, I think it's 1 or 2 months here, every single month has been above 400,000 new business applications. And so if you're doing audio only and you can't see this chart, pre-2020, it took it from about 2010 up until about 2020. It went from about 200,000 new business applications up to about just short of, or right around 300,000 business applications. It took about 10 years to slowly trend up in that direction. Then COVID hit, you see a little drop down, and then a huge spike to over 500,000 applications. My best guess is that some of these state agencies were probably behind in catching up on that. And then it stabilized mid to late 2020. And now every month thereafter has been over 400,000 new business applications. What this means for you and your business development and franchise development, if you're dealing with, if your customers are small businesses, the idea of business startup entrepreneurship is on the hearts and minds of prospective franchise buyers. So when you have prospective franchisees coming in, you ought to be assuming that they're serious about starting a business, whether they buy your franchise or maybe start their own business. They are very, very serious about this. I think an interesting thing on this is with planned wages. If we look at this December report, what's interesting is U.S. business applications from corporations is down, and with planned wages is up 3.6%. So generally, these are businesses that are going to hire employees. They're not solopreneurs. Okay, so I think that's a really good thing. And the startup from corporations, that means that these are likely individuals that are starting a business that are going to be hiring people, which tends to be what a typical franchisee is doing as they're going through this process. So just some food for thought as you're starting to talk to and work with prospective franchise buyers. Okay, next up on our list is the U.S. Chamber of Commerce Small Business Index Q4 of 2024. This is presented by MetLife and the U.S. Chamber of Commerce. And it says, the headline reads, despite inflation concerns, small businesses remain optimistic. And I really like scrolling down to this so we can see this trend line that they have put together. And it shows in Q4, 69.1% of small businesses were showing a positive reading on where the small business community is going. And if we look back to Q1 of 21, it was at 55.9. And so you see this slow, steady rise through 21, 22, 23, 24, the slow rise over a 4-year period from 55.9 on up to 69.1, which I think overall you can see a nice steady growth. That's a positive thing for the small business community. If in your franchise network or franchise system, you very well may be seeing this as well. If you're a franchise broker talking to folks, look, this is a good thing. Franchise validation is probably a little bit easier today. Just taking a look at this small business index, just as a whole, is more positive than it was a year ago, and it's more positive than it was 2 years ago, than it was 3 years ago, than it was 4 years ago. So keep that in mind as a whole. Now, obviously, there are individuals and differences, but just something to be thinking about. Okay. Let's see here. Index score dips. It says inflation remains the top challenge. For them, 55% say inflation is a top challenge facing their business this quarter. This is the 10th consecutive quarter in which 50% or more have cited inflation as their biggest challenge. So we were just talking about inflation. So being able to talk about if we know where inflation is at 2.9%, I just jumped back to the Trading Economics report here. And then we look at this sentiment saying 55% say that that's their biggest concern. As a business, as a franchise system, or as a franchise broker, how can you help educate your buyers? How can you help educate them in terms of what to expect on inflation here? What does this actually mean? Let me bring my screen back here. There we go. So you having an answer for how your business or your franchise system is planning to address inflation is important. Whether it's reviewing financials to make the franchisees, to help the franchisees run a profitable operation, to help them increase prices, reducing costs, maybe talking to your suppliers. Maybe you can't reduce the cost from your supplier, but maybe you can help reduce the increase in cost. Maybe there's a planned increase of 5% by a supplier this year, just as an example. Well, what if you could take that 5% and can get that down to 3.5% or 2.5% for your franchisees? That's a big boost and a big help. And make sure you're talking about that with your franchisees. Very important as you're thinking about it. Okay, next quarterly report I want to take a look at, since we're at the first of the month, is the Q4 2024 Vistage CEO Index Report. And it says, the headline reads, CEO confidence soars into 2025, signaling the approach of the long-anticipated growth cycle. Now, this is from Vistage.com, Confidence Index Resource Center. And what you can take out of this, this is put together by Vistage along with the Wall Street Journal. And if you're not familiar with Vistage, it's a peer-to-peer mastermind group that they run. And let me pull up this report. It says 33% of CEOs reported economic improvements. Future economy, 55% of CEOs expect the economy to improve the next year. For revenue projections, 76% of CEOs expect increased revenues. 61% of CEOs expect increased profits in the year ahead. 41% of CEOs plan to increase fixed investments in the next 12 months, which is up from 34% in Q3. And 65% of CEOs plan to expand their workforce over the next 12 months, which is up from 50% last quarter. So look at all of these signs that seem to be pointing to an anticipation of a growing economy. I think that's a really healthy sign for you to be sharing with your franchisees and prospective franchisees. This here is the Wall Street Journal Vistage Small Business CEO Confidence Index. So I like taking a look at this. I want to take a look at the all-time report. So look at this, December of 2024. Look at how this jumped from October. In August of 24, it was down at 83%. In December of 24, it's up at 111.9. It looks like in May of 21, it was 119.9. January 18th, January of 2018, 120 was the last time it was around these numbers. So we're talking, these are at some peak confidence levels going into 2024. So I think that's a really positive sign that if CEOs and business leaders are thinking about this, that's a positive indicator. Okay. Another report to take a look at, This is from guidantfinancial.com/small business trends, small dash business dash trends, I should say. And they aggregate some trends for small business. And I think it's really interesting to note this. They were asked, what are the top plans for 24? Increased staff, digital marketing, business types they interviewed. 27% were looking to start new businesses, 31% buy an independent, 32% was a new franchise, and 10% to buy an existing franchise. So I think that's interesting. In the top states are Texas, California, Florida, and Georgia. Just some interesting data to note here to talk about. And I like, from franchise folks, 42% of their activity is in the franchise realm. Okay, let's take a look at this is from Franchise Ventures and franchiseinsights.com. This is their December 2024 Small Business Startup Sentiment Index. And this sentiment index says aspiring owners enthusiastic about startups in 2025. It says a record 93% of share of respondents plan starts within 12 months, 89.3% optimistic about business conditions 3 months out, coincides with spike in high propensity business formations. So 64% say now is a good time to start the business. So this sentiment was taken at the end of December of 24. It was taken between December 23rd and December 31st of 24. And 64% of them said that right now. So that's almost 2 out of every 3 people, 2 out of 3 people that are thinking about starting up a new business said that right now, not 3 months, not 6 months, not a year, right now. What does that mean? It means franchise buyers, prospective franchise buyers that are in your pipeline right now have franchising on their mind. It's a really, really important thing to be focused on. So again, reaffirming that you need to assume that your franchise buyers are starting a business. You need to assume that. Don't assume that they're going to wait and this and that. They're doing something. They're motivated. They're motivated to do that now. Let's see here. Okay. The question they ask is, which factors will have the biggest impact in the next 6 months on your decision to start a business? 64% of them said funding or access to credit. Okay. 33.7% said economic climate, and 27.9% said political changes, 23.3% regulatory changes. Far above and away, it's almost twice as high as the second one to it is funding and access to credit. So as a franchisor, if you can figure out a solution to get funding through a service, some of these franchise funding sources like a Guidant Financial, where we took that from, that we looked at the previous report on. There are lots of franchise funding brokers and groups out there that can help you with that, or maybe banks you've worked with in the past. But having a solution is going to go a long way as you start to think about selling more franchises. Economic climate, almost 34%. It's about 1 out of 3. So a lot of the data we're going over here, a third of them are concerned about it. So if you can share with them the data that I'm sharing with you here, and then have a solution for funding and access to credit, you're going to gobble up most of the concerns that prospective franchise buyers have, or prospective folks with startups. So anyway, I think that's a golden nugget of information for you to take and write down and share with your sales team, marketing team, even with your other leaders in your organization. Okay, let's take a look here. What is the last? Oh, this is on. This is just the percentage of business owners. So this is just by age group or demographic. We have Gen X is currently the largest share of folks looking to start a business, 52.4% of them. Boomers were number 2 at 21.4%. Millennials are at 20.2%. And Gen Z had a bigger slice of the pie this session at 5% of the folks looking. So we're starting to see this. This has been fairly consistent. About half of the folks starting have been Gen Xers, and about 25% or so have been boomers and millennials, or each boomers and millennials having each around 25%. And then with Gen Z slowly increasing and adding to their interest. Okay, the final piece here to take a look at is just this report that came out this came out January 23rd. So this came out literally yesterday on what are the top drivers for pursuing business ownership in a survey that Franchise Insights conducted. What it found is that 76.8% of prospective buyers want to be, their top driver is they want to be their own boss. So almost, 75, 80%. Income potential was number 2 at 61.8%. Lifestyle rewards, 47.1%. Side business to supplement income, 43.3%, and tired of climbing the corporate ladder, 40.2%. I think the takeaway here is be my own boss. This has been a staple in franchising for a long time in marketing, messaging, and communication, but this data makes it clear as day. When in doubt in your franchise sales and marketing process, help point out to the prospective buyer how your franchise and franchise system helps that prospective buyer become their own boss. I think that's a really important piece for you to think about and take a look at. So that's our session today here, folks. Again, please make sure you subscribe to our podcasts. We have 2 of those, Multiply Your Success and the Franchise Your Business podcast. All of our content and everything is available on YouTube on our company page at Big Sky Franchise Team. And I'd love to take questions if anyone has any questions or comments here before we close this out. I'm not seeing anything come through, so I just want to thank you all very much for sticking with me. I know we had a few extra reports to go through because it's the start of a new quarter, and we get some of these quarterly reports that come out. But thank you so much for being here. Have a great rest of your day. Have a great weekend, and we look forward to having you back for a great session next week upcoming on FDD renewals. And if you have not registered for our franchise sales training workshop, which is 1 week from today on January 30th. You still have time to do that. We have a few seats still available. We're about to max out on that, but we do have a few seats. We're maxed out almost at 25 seats here. So just to let you know, we do keep that to a relatively small group. Thank you so much for being here. Look forward to it. And if you want to register for that class, just go to our website, bigskyfranchiseteam.com/ and you can go to our franchise sales training class or send me a message or an email or your contact here at Big Sky. Thanks so much, everyone. Take care.